The Philippines, an enchanting archipelago consisting of more than 7,000 islands, is situated in Southeast Asia. With a population of over 113.9 million, it is a diverse nation known for its warm hospitality and rich cultural heritage. The country is strategically located in the Western Pacific Ocean, sharing maritime borders with countries such as Taiwan, Vietnam, and Indonesia. Beyond its picturesque landscapes and stunning beaches, the Philippines is on track to become a trillion-dollar economy by 2033, driven by its vibrant domestic economy and impressive growth rates. With a GDP growth rate of 6.4% in the first quarter of 2023, the country's economic momentum remains strong, surpassing other major economies. Despite challenges such as high inflation and rising interest rates, the Philippine economy continues to outperform expectations. Projections by S&P Global Market Intelligence indicate that the country's nominal GDP will reach the trillion-dollar milestone, positioning it as a significant player in both Asia and the global market. Furthermore, the average GDP per person is expected to see remarkable growth, reaching over $6,000 by 2030. By capitalizing on its strengths and embracing the opportunities ahead, the Philippines is on track to shape its future and carve out a prominent place in the global landscape. Hello and welcome to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Before we start, make sure to leave a like, subscribe, and comment below if you enjoyed watching this video, and turn on the notification bell to keep posted. And now, without further ado, let's start. The Philippine administration emphasized the nation's vibrant domestic economy and promising future. In the first 3 months of 2023, the Philippine economy grew at a rate of 6.4%, according to data published by the Philippine Statistics Authority. The economy of the Philippines is currently one of the most dynamic in the world. This indicates that it has its own momentum and strength, which will allow it to maintain its growth even if the economic conditions in the region and the world as a whole were to deteriorate. Given the current GDP growth performance statistic, the government's aim of 6 to 7% GDP growth for 2023 is well within reach. In addition, according to the most recent data from the top 40 global economies that have published their first quarter 2023 real GDP growth, among developed and significant rising economies worldwide, the Philippines experienced the fastest growth. Following the Philippines, the next fastest growing economies were India at 6.1%, Malaysia at 5.6%, Indonesia at 5%, and China at 4.5%. Compared to the country's recovery period from the pandemic in the second quarter of 2021, the first quarter of 2023 saw the Philippines' GDP grow at its weakest pace, which is at 6.4%. The low base impact of the previous year's growth explains why this quarter's figure is lower than last year's 8.2%. Right now, the economy is restoring its prior trend and resuming the nation's strong growth trajectory. Meanwhile, even though inflation is high and interest rates are projected to continue rising, the Philippine economy is still growing faster than expected. Nonetheless, after jumping to 8.7% in January, inflation has since slowed to 6.6% in April and 6.1% in May. Therefore, if wages are increasing due to additional work opportunities or an improvement in the quality of those opportunities, households will still be able to raise their consumption levels even if prices are a little high. The PSA also recently stated that the employment rate in the country had risen to 95.3% in March 2023, with 48.6 million people now having jobs. Moreover, the Asian Development Bank predicts similar growth of roughly 6% for 2023, driven by strengthening domestic demand and a return of tourists, but restrained by inflation and heightened geopolitical uncertainty. Based on Q1 GDP data, the government is sticking with its goal of 6 to 7% growth in 2023 and 6.5 to 8% growth in 2024 to 2028. Furthermore, S&P Global Market Intelligence projects that the Philippines' nominal gross domestic product will reach $1 trillion by 2033, thanks to the country's strong growth prospects over the medium term. As a result, the Philippines will be a major player in the emerging markets of both Asia and the world. In addition, the average yearly GDP per person has increased considerably over the previous 2 decades, from less than $1,000 in 2000 to an expected $3,500 in 2022 and more than $6,000 in 2030. On the other hand, the remarkable recovery from the COVID-19 pandemic in 2022 contributed to the Philippines economy expanding at its quickest rate since 1976. In 2022, the Philippines' GDP growth rate of 7.6% was similar to that of some of the world's most rapidly expanding major economies, such as the oil-exporting countries of Saudi Arabia and the United Arab Emirates, as well as Malaysia, Vietnam, and India. The Philippines' economic growth has also been much better over the past 10 years, with the exception of the peak of the COVID-19 pandemic in 2020 and 2021, when economic activity around the world was disrupted. Between 2012 and 2019, the Philippines' real GDP grew by 6% to 7% annually. As a result of the 2022 economic recovery, real economic growth reached its fastest rate since 1976. Household final consumption spending increased by 8.3%, while gross capital creation increased by 16.8% annually. For 2023, we can expect the economy to continue growing strongly. The latest survey data from S&P Global's Philippines Manufacturing Purchasing Managers Index for March 2023 indicates growth in both manufacturing production and new orders. In addition to a rebounding tourism industry and surging exports, steady remittances of money from overseas employees are predicted to keep the economy humming along in 2023. Moreover, the IT and Business Process Association of the Philippines projects that by 2022, the number of people employed in the country's IT-BPO industry will have reached 1.6 million, while the sector's revenues will have hit $32.5 billion. As a result of the country's well-educated labor force and widespread command of the English language, the Philippines' IT and business process outsourcing industry is poised for sustained, rapid expansion in the years to come. Furthermore, the GDP of the Philippines is expected to double from $400 billion in 2022 to $800 billion in 2030, indicating sustained high economic growth. In particular, rising household wages in urban areas will fuel a surge in private consumption spending. By 2033, it is anticipated that the Philippines will join mainland China, Japan, India, South Korea, Australia, Taiwan, and Indonesia in the select group of APAC nations with a GDP worth $1 trillion. The GDP per capita in the Philippines is projected to surge from $3,500 in 2022 to $6,200 in 2030, thanks to the country's rapid economic expansion. As a result, this will encourage both international and domestic investment in a wide range of Philippine industries, bolstering the country's domestic consumer market and stimulating economic growth. If the country can improve its infrastructure, the Philippines might become the world's 18th largest economy by the year 2050, according to a report from Capital Economics, a London-based firm specializing in macroeconomic research. Additionally, the Philippines' nominal gross domestic product is expected to reach $4,862 billion in 2030, up from an initial projection of $2.8 trillion. This would result in a nominal GDP per capita of $33,650. Hence, using the most recent projections, the Philippines is expected to have a nominal GDP at market exchange rates that are only slightly lower than that of the United States, China, India, Germany, Japan, the United Kingdom, Indonesia, France, Canada, Australia, South Korea, Mexico, Russia, Vietnam, Italy, Brazil, and Egypt by the year 2050. The Philippines also stands to gain advantages from its participation in the newly established RCEP trade agreement. One notable benefit is the favorable treatment of rules of origin, allowing for cumulative benefits. This provision will support the development of manufacturing supply chains across various countries within the RCEP region. As a result, the RCEP member countries, especially low-cost manufacturing centers like the Philippines, will be able to attract greater amounts of foreign direct investment for a wide variety of industrial and infrastructure projects. For instance, through the RCEP agreement, the Philippines obtained a very favorable deal from China. Chief of the Philippines National Economic and Development Authority, Arsenio Balisacan, said joining RCEP will provide the Philippines access to a much larger market. It shows that the Philippines is ready to do business and that it follows international norms regarding labor standards and trade regulations. In this connection, when exporting goods, especially agricultural goods, The country would be required to adhere to international standards under the RCEP. The RCEP was established last January 1st, 2022, and is made up of the 10 countries that are part of ASEAN as well as its commercial partners, which include Australia, China, Japan, the Republic of Korea, and New Zealand. The RCEP, spearheaded by the Association of Southeast Asian Nations, includes the Philippines as one of its member countries. Based on the parties' combined GDP, which accounts for approximately a third of global GDP, it is regarded as the largest free trade area in the world. In addition, the framework makes it possible to enter a market with a size equivalent to nearly one-third of the total population of the planet. Thus, the following decade holds great promise for the Philippine economy, with substantial growth and improvement anticipated. Meanwhile, according to the Philippine government's Family Income and Expenditure Survey for 2021, around 20 million individuals, 18.1% of the entire population, still live in poverty. However, over the next decade, the significant increase in per capita GDP and living standards is expected to contribute to an overall enhancement in human development indicators and lead to a substantial decrease in the proportion of people living in extreme poverty. Hi! We hope that watching this video was interesting and that you learned something valuable. If you enjoyed it, please hit the notification button, like, subscribe, and watch more of our videos. Also, don't forget to share your comments in the comments section below. This is Finance Sense, helping you stay current on all the most recent changes in the financial markets and economy. Stay safe and look out for the next video.